Hello and welcome everyone to Gold Asset of the Day for the 17th of March 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we are halfway through the week right now, what do you need to be aware of? Well, first of all, on Wednesday we have the FOMC statement. This is going to really be the highlight of this week. Many traders and investors are anticipating this event to have a big effect on the markets. This can also be a catalyst for very large moves on the precious metals. Now, at the start of the week, we of course saw the impact of the new stimulus coming through into the markets, the 1.9 trillion of stimulus, which has now been agreed in the USA. And with that, we did see a slingshot move higher at the beginning of the week with the metals. In fact, today, over two positions on gold, we banked 470 points of profit. These are new trades that we've established in the last few days here, where all we're doing really is looking to capitalize on the recent volatility and range-bound price action. On top of that, today we saw a phenomenal windfall profit on one of our palladium trades, where it broke out today just under 6%, and we banked 3,450 points profit on one of our palladium trades. So again, for every one lot that you would be trading, that's $34,500 of profit. For every 10 lots that you'd be trading, that's $345,000 of profit on our palladium position. We've also seen some really nice bounces higher here on energies. We continue to have exposure and capitalize on the breakouts that we're seeing as we transition into this commodity super cycle. Right now, there are just so many opportunities on commodities. Now, going back to gold more specifically, we still like this as a very tradable market. Each day, each week, you're seeing very specific ranges that you can capitalize on. Be nimble, look at it as a trader's market. Over this week, I would see an opportunity if we were to revisit between now and Friday back towards that 1700 layer for gold. I would expect the price to get a bid at that zone. It's just something to bear in mind. Right now, gold is trading at $1,731 per ounce. We in fact took some further profit off the table today at $1,740 before we've seen this subsequent $10 pullback. But again, gold is great right now just to keep regularly banking those profits. The ranges on gold is volatile enough for you to do really well as a trader. Where we keep seeing traders come unstuck on this market is, number one, they're not banking profits, and number two, they're using outdated technical strategies or gimmicky indicators which are just not serving them in this market. They keep getting chopped up all the time on gold, selling at the wrong times, buying at the wrong times. You want to be more effective than that in the way that you approach this market. Again, it's not a long-term buy and hold market currently. If you've been doing that essentially since July, you've made no money on gold. It broke down to 9-month lows just last week, but it's very lucrative for trading in and out this market. And as you know, many commodities which are now transitioning into a super cycle, they don't go up in a straight line, they will zigzag. This way you want to keep taking this opportunity to bank profits at the highs and then reload on these corrective pullbacks that we keep getting on a regular basis right now. As you may know, trading commodities is a zero-sum game. So effectively, there is always someone on the other side of the trade. And the majority of the time, it is the technical traders in the market who are losing all the money. And it's the professionals, the hedge funds, the money managers, the banks and institutions that are making all of the profit in the market against all of the technical traders just utilizing their outdated strategies and indicators which don't work. So of course, if you would like to learn that professional approach, learn the research-driven approach to the markets, where you're going to be utilizing market data, intelligence, understanding of capital flows, daily, weekly, monthly, quarterly cycles in the market, marry that up with the seasonal plays, sentiment, alongside macroeconomics, the intermarket correlations, ratios in the market, key liquidity zones, as it's just as important to know when to bank your trades as when to get into a trade. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.